Hey guys, this is Cameron with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today I'm taking a question from Micah. Micah asked, doesn't BRRRR, if you guys aren't familiar with BRRRR, I've got another video on BRRRR. It's buy, rehab, rent, refinance, repeat. It's a way to massively leverage your undervalued real estate. Does this, the BRRRR strategy, destroy your net to income? I think that must be debt to income ratio after a few mortgages being on your credit. The second part of that question is, isn't it possible to only have 10 mortgages on your credit? Okay, Micah, these are great questions because I get the debt to income thing quite frequently, or it was definitely one of my concerns when I started out doing the BRRRR strategy. So where do I even start with this? So the bank or whoever you have doing the final refinance on the end, they, depending upon what their rules are, find out what it is. If your rent payment is $500 a month and you can rent it at $1,000, or your mortgage payment to the bank is $500 a month and you can rent it at $1,000, are they going to take $1,000 when you have a 12-month lease and a tenant? That's what all my lenders have done. Will they take the full amount? Will they take the full $1,000, or do they cut off some for expenses? So my banks, if I had a $1,000 a month rental, they would only count that income when I had a 12-month lease, and they would only count 75% of the income, monthly income. So what does that mean? If you have a $1,000 a month unit or rental property, they're going to take $750 of it. 1,000 times 75% is $750 a month. Then they'll use that $750 against my $500 mortgage payment. I'm talking PITI, principal, interest, taxes, insurance, the whole thing. It's $500, but after the 25 or the 75% of rent, I'm still clearing $250 a month. Okay, I hope you're staying with me here. $1,000 a month rent, they'll only take 75% of that, which is $750. My mortgage payment, PITI, is $500. I net $250 a month. If after that 75% calculation, you net positive number, your debt to income gets better every property you buy. It was really hard for me to grasp. So my first property, of course, when you do the refi, you don't always have a tenant, right? Because you want to get the property refinancing, get the private money lenders paid off, or the hard money lender, and get that paid off really quickly. If you don't, if it takes if you don't get it the final refinance quickly, then you sit there with a long hard money loan, which can really eat into your profits. But if you get it done quick, typically you don't have a tenant in it yet, it's still vacant. So your first property, and then you have a $500 mortgage payment, which does significantly, if your income was $2,000 a month and now you have a mortgage payment of $500, that just lowered your income side by $500. Right? Your net income went down. Your debts payments went up and your income went down. Or your net income went down. But when you find cash flowing properties, like the example I used before, you're adding $250 a month to your income side. Net after everything's said and done, after the mortgage payment's said and done. So as long, Micah, as you're buying cash flowing real estate, your debt to income gets better with every purchase. The first house you buy is $250. The second house you buy is $150. The third house is $350. The fourth house is $100. The fifth house is $100. All those stack up, and now you've got an extra $1,000, $2,000, $3,000 on your income side. You have your debt side that's risen, but your income side has risen faster, if that makes sense. So the first one will hurt your debt to income until you get a tenant in there. That's how my banks have worked. Once you get a tenant in place, you're good. That's a 12-month lease is what they've required. My banks have required from me. Again, you'd have to speak with your credit union or whoever you're dealing with to determine what their lending criteria is, but see what kind of percentage they take from the monthly rent payment. The second part of your question Isn't it only possible to have 10 mortgages? No. It is possible, it is only possible to have 10 Fannie Mae and Freddie Mac mortgages. Meaning, every other bank, or most banks, they come to you, or you go to them and you say, hey, I want to buy a house. They say, okay. They lend you the money, and then they take your paperwork and they sell it to Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac buy your mortgage. They buy it. They give the bank the $100,000 or $200,000, and then you're making payments really through to them or whatever. It's a federal program. It's got all sorts of crap behind it. I'm not sure on all the intricacies behind Fannie Mae and Freddie Mac. Learned that in real estate class. Couldn't tell you anything about it. But I do know that if the bank is going to sell their loan to Fannie Mae and Freddie Mac, there are certain requirements that bank has to meet. And one of them, which is really important for real estate investors, is you can't have more than 10 financed properties. Now, I say it's important for real estate investors. There's so many other options. You do portfolio loans like I've done. I've got 20 some mortgages. One of my banks does not report any of them to on my credit report. One of my banks does, but they don't care how many loans I have. They don't care. They just said, they're giving me $1 million or $2 million loan amounts, or up to a total loan amount of $1 million, $2 million, whatever, and they don't care about my credit report. Fannie Mae, Freddie Mac, whatever bank you go to sell your mortgage, or whatever bank you go to that is going to sell their mortgage to Fannie Mae and Freddie Mac, will pull your credit, see that you have 10, done. For an investment property, let me make that extremely clear. I just found this out. Fannie Mae and Freddie Mac will only lend, at the time of this recording, which is August 7th, Fannie Mae and Freddie Mac will only lend more, you can only have 10 investment loans. Meaning, you have 10 investment properties, you all of a sudden decide you want to buy a primary residence. You can buy a Fannie Freddie, you can go get a Fannie Freddie loan on your primary residence. You cannot buy any more investment properties through Fannie Mae, Freddie Mac, but you can buy a primary residence. So, if you get to property 10 and you're an investor and you've got all these investments, then you have to start either going to, they call them non-QM, non-qualified mortgage, which higher interest rates, whatever, commercial debt, or you have the option of looking at doing prime, just live in it for a year, buy it as an owner occupied, live in it for a year, and then keep going. Now, I hope that made sense. So if I can recap, first, BRRRR destroy your debt to income ratio. For the first property, yes, but after you have that property rented, and if it cash flows per your bank's guidelines, you're good. Every one you do will get better and better. Second question, is it possible to have only 10 mortgages on your credit? Some banks, portfolio loans, do not report to the credit bureau, and some do in-house loans. The ones that care about 10 finance properties for investments is Fannie Mae, Freddie Mac, not for your primary. So you can buy an 11th Fannie Freddie loan, a property for your primary residence through Fannie Freddie, if you already have 10. But Michael, one thing I do want to emphasize, and I hope this has all made sense. If it hasn't, let me know below or shoot me another email. One of the big questions or big things, I get this a lot, like, oh, I'm really worried about my 10 mortgages. How do I do this? How do I set this up? If I was to start over, first of all, the odds of you getting 10 mortgages over the next year, 2, 3 years is very low. Okay? You got to spend quite a bit of money, quite a bit of time, and in today's environment, property's got a cash flow, makes sense. So the odds of you hitting that number are pretty low, especially quickly. So you'll have time to make some adjustments, pay them off, consolidate loans, do different things like that. But the second piece is, once you get there, there's so many other options. Like I said, you got non-QM, you have commercial. If I was going to start over, I would go all Fannie Freddie loans for my first 10, just do normal standard Fannie Freddie loans. Then I would find a portfolio lender and buy investment properties from a portfolio lender for the property mortgage number 11 and beyond. Once you tapped out your portfolio lenders, you know you got non-QM and commercial debt. Those are your options. But I really wouldn't get too hung up on what you can do for, you know, your 10 mortgages. Just start. Get your first property. When you get to 5 or 6, then I would start, okay, we got a plan here, because if I run into a couple deals, I don't want to get myself in a pinch. But if it was me starting over, I would do 10 Fannie Freddie loans, then find a portfolio lender, because I'm telling you, I'm looking at some of the commercial debt now. A 20-year, excuse me, a 20-year amortization, yeah, it makes me actually cough or choke looking at these damn monthly payments on a commercial loan versus a residential loan, because you get, in current environment, you can get 3.5% on a 30-year fixed residential loan. On a commercial, you get, it's 20-year amortized only 20 years, and it's like 4.5%, 5%, which is still low. I understand that, but the 20-year amortization bumps the payment up significantly. And if you're already looking at $200, $300, $400 a month in cash flow, that could bump your payment up $200, $300, $400, and your cash flow's gone. And you got to do it every 5 years. They have a 5-year balloon or a 5-year adjustment. So, Micah, I might have given you too much. I don't know if your head's spinning right now, but I hope that was helpful. If it was, let me know. If it wasn't, let me know. If you have some other questions, or I didn't explain something more clearly or clearly enough, I can do another one of these and help you out, because this is an important question. It does come up a lot. If you guys haven't checked out, like I said, I've got a couple other videos on BRRRR and the BRRRR strategy. So yeah, appreciate it, guys. I'll see y'all next week. Thanks.